from today is tax filing deadline day. It's actually Monday the 18th this year. You have to file your tax returns. You have to pay the taxes you owe, but you don't have to pay more than you should. A lot of us do. George Wells is with us this morning from the firm Legacy of America, Financial Planning, Auburn Hills, with advice that he's giving his clients. And I know you deal with a lot of CPAs this time of year with your clients.
And the main question is, Murray, what's your 43? Know what line item 43 is? You can find it on the second page of your income taxes, about a quarter of the way down.
There it is, right there on the screen on the old 1040. Why is 43 so important to us?
Because after all the income that you've generated, whether it be dividends, interest, capital gains, income from a job, and you've made all your deductions, line item 43 determines the amount of tax that you end up owing.
Okay, so that's the one that's most important. After we complete the 1040, we should be looking at that, and we should be remembering it throughout the year.
That's right. You should know what your 43 is for the last couple of years. You should know what your 43 is for this year, and now is the time you should be planning what your 43 is going to be for next year.
And the point is that a lot of people fail to tax plan. Many of us plan our spending, we plan our saving, we plan our investing, but we don't plan our taxing. What should we be doing?
Pay your taxes deliberately. No one wants to pay income taxes. No one wants to pay too much in income taxes. And regardless of what that amount is, you need to be paying it deliberately. And there's some choices that you have the opportunity to make to determine what that line item 43 is going to be.
All right, and that means lowering the taxes that you pay, not owing as much. Let's take a look at some of the things that you have sent me. A bunch of great tips. First of all, 401k IRA contributions. It lowers your taxable income because
that's money now that you're deferring to some future time. And the reason that's important is because you want to be levelizing that 43 amount and not paying too high of income tax in any given year.
People are confused about Roth. You say Roth contributions, very, very important. What about the Roth conversion?
The big importance right now for the Roth contribution is you have 2 more weeks to do a contributory Roth IRA, which is $5,000 each for 2 people in a family, or $6,000 each if you're over the age of 50. It's too late to do the Roth conversions for 2010, but you still can make those changes for 2011.
It maintains your taxable income, as we showed you right there, but everything that you make in that account, you don't pay taxes on at a later time.
The Roth IRA is tax-free forever.
All right,
you'll never again pay income taxes on that money or the gains on that money ever again.
All right, so that's why that's important. That's the Roth conversion right there. Let's move it along right now and talk about the conversion. Of course, we mentioned that it will increase your tax burden right now, but you get the benefit later when that money grows. Capital gains, tax-free. If you can stay in the 15% tax bracket, you pay 0 long-term capital gains.
Isn't that amazing? 15% tax bracket, 0 long-term capital gains. This rule has been around for 2008, 2009, and 2010. And now, Murray, it's been extended for 2011 and for 2012. So if you can stay in the 15% tax bracket, you pay 0 long-term capital gains.
All right. Pay taxes, property taxes, you say, that are due next February early. Property taxes, you say, pay the taxes in February of next year to reduce your taxable income in the current year.
And that's simply loading up some of those tax costs on 1 year and pushing them to the next year sometimes, so you can benefit from more of those tax reductions on the year you choose to have the tax deduction.
And what about interest on investments? Let's briefly talk about interest on investments, because that's another one of your tips. Taxable interest on investments, some of them allow you to decide when you receive a 1099.
That's right. For some accounts, you can determine when you're going to be actually receiving the taxable event for the investment, whether you receive it in this tax year or in next tax year. And that's why knowing your 43 is so important, because you determine, should I be taking that tax cost now or should I be pushing it towards the next year?
All right, knowing your 43. What is your 43? We go back to where we began, and we have these tips that we discussed and much more information on our website for you. Thank you, George. We also have a link to your website as well. myfoxdetroit.com. Just click the Money Monday page and you'll get it all there. Hope you'll come back soon and see us again with more tips.
Thank you.
We'll see you tonight on Fox 2 News beginning at 5 with Job Shop and Money Works, working for you.